Right. So Uber's third quarter was pretty strong for the most part, but there was a few details that are sending the stock price lower. But the management team, like most management teams, on the front page, on the top, will talk about the positives and they won't reveal the negatives, and they'll make you search for it all the way down on like page 9 of an 11-page report or page 17 of a 30-page report, digging through the details. That's something that bothers me about some management teams, but I can understand why they feel the need to do this. So we talked about all the good news. So what was the reason why the stock price is down? And in my opinion, it's because of the increase in cost. You could see the income from operations only increased by 5%, while revenue increased by 20%. So its costs increased by more than what revenue increased, or not as much, but increased by a significant amount, which made the income from operations not grow by as much. Usually you'll see Uber, when its revenue grows by 20%, its operating income will grow by a much larger amount because it's, like I mentioned, an asset-light business model. When the scale increases, the unit economics multiplies more frequently, right? Each transaction is profitable for Uber. And so the more transactions that are happening, the more profits it's generating. So now let's take a look at valuation. So I calculated an intrinsic value per share for Uber at $132. The current market price after the 6% decline today is $94. So it looks considerably undervalued based on my DCF calculation. Uber's trading at a forward PE of 30, which I think is cheap for a company that's growing revenue at 20% with an asset-light business model with a multi-trillion-dollar total addressable market opportunity. So I think the stock is cheap. The risks of driverless car technology disrupting its business remain. As I said in the preview, there isn't much Uber can do in any one single quarter, but what they could do is over time continue to lower those risks. And I do believe they did lower those risks in the current quarter by increasing the number of monthly active platform customers, which increases the cost of switching, and then by increasing their profitability, increasing their cash flow, increasing their revenue. That gives the company larger scale to invest in the newer technology. So they did take positive steps in that direction. All things being considered, do I still think Uber is the best stock to buy right now? The answer is yes. I still like Uber stock. I still think it's one of the best, and in fact, the best stock you can buy right now.
Click the link below to watch the full video.